Elon Musk recommended looking through Ark Invest's Tesla valuation model multiple times during Tesla's 2024 shareholders meeting, which is exactly why I wanted to make this video. The more we understand about Tesla, the better, and one of those ways is through Ark Invest's thorough analysis. Over at arkinvest.com, Ark expects Tesla's valuation in 2029 to be $2,600 per share. That's roughly a 15 times increase from where we are today. They predict the value that Tesla's shares should be at if the company executes its plans and succeeds in doing so. However, the actual stock price might have a total disconnect with reality, as we've seen so far in the past. It's worth noting that the stock market does not always price everything in. Remember when Tesla stock was flat for all these years? Despite the Model 3 successfully ramping, despite the Model S and Model X continuing to embarrass the auto industry with their technology, range and performance, despite so much being in the pipeline for Tesla. If you know what's coming in Tesla's future, it's only a matter of time before the share price should catch up. Not investment advice, of course. I'm just another idiot on YouTube. Do your own research, do your own thinking, bloody blah blah blah. Ark's updated open source Tesla model yields an expected value of $2,600 per share in 2029. The bull and bear cases, tuned to the 75th and 25th percentile Monte Carlo outcomes respectively, are approximately $3,100 and $2,000 per share as shown below. A Monte Carlo simulation is used to model the probability of different outcomes in a process that cannot be easily predicted due to the intervention of random variables. It's a technique used to understand the impact of risk and uncertainty, a mathematical method that you can use to predict the future using data. Portfolio managers and investment planners use this method. It's also used in medicine and astrophysics. It seems the most reasonable way to value a company's future based on variable outcomes. It gives a much better understanding of the possibilities that the future holds. This research update presents Ark's open source Tesla model, which incorporates distributions from 45 independent inputs to simulate a range of potential outcomes for the company and its stocks. If you take the bear case, for example, in this analysis, the probability that Tesla stock could be worth $2,000 per share or less in 2029 is 25%. And with the bull case as well at $3,100, the probability that Tesla could be worth $3,100 per share is also 25%. So that leaves the expected value, so somewhere between the 50% range, to be around $2,600. Here's how Ark have landed on this price. This is modelled share price outcomes, a scenario mix within bins of 1% probability. So 100% probability this end, 1% probability down here. So somewhere in between this mark is where they expect it to sit, which is just there. It's also worth noting that with no autonomy in the mix, Tesla as a car company and what's going on right now, they expect the valuation to be $350. Ark estimates that nearly 90% of Tesla's enterprise value and earnings will be attributed to the robotaxi business in 2029, as shown below. Meanwhile, electric vehicles could approximate a quarter of total sales and 10% of Tesla's earnings potential, as we believe the robotaxi business will add much higher margins. The chart below breaks down attributable revenue, EBITDA, and enterprise value by business line. So let's take a look at this one. Here's enterprise value by business line. In expected value case, Tesla should be an $8.2 trillion company when you take everything into account. So 88% of the enterprise value of Tesla would be the robotaxi. Electric vehicles account for 9%, just 2% stationary energy storage, and 1% insurance. We'll get into a bit more of this later about what's not included, but clearly a massive proportion of Ark's valuation for Tesla is coming from autonomy. This table presents what are plausible forecasts for both bear and bull outcomes. So we're looking at cars sold in millions here, so the example bear outcome would be 5.8 million cars by 2029, or the bull case, best case scenario, would be 14.4 million vehicles. But if we look down the bear case for autonomous ride-hail revenue, we're looking at $603 billion per year at that point. So bull case, this is nearly $1 trillion of revenue per year by 2029. That's quite a big deal. And the total gross margins would be around 50%. That's huge. And a market cap would be about $7 trillion. Or, bull case, almost $11 trillion. That would be nice, wouldn't it? Okay, let's look at the updates to Ark's 2023 Tesla model. Updated autonomous driving assumptions, updated Tesla manufacturing growth rate, 2029 model considerations that are not key drivers of our price estimates. This is a pretty important point we'll get to later. They're not including a lot of things here. No Optimus, no stationary storage. updated autonomous driving assumptions. We believe that Tesla will launch a robotaxi service within the next 2 years, and that the probability Tesla fails to launch a robotaxi service within 5 years is de minimis, as shown below. Now, de minimis, I did have to look up that word. That means lacking significance or importance. There's no shame in it. I'm learning new words every day. I forget them instantly, but de minimis, there we go. This is the percentage of simulations indicating the first year of Tesla's robotaxi commercialization. They put a 58% weight on it being solved by 2025, 38% by 2026, just a 4% by 2027, and then it's pretty minuscule from there on. So they're really assuming that autonomy will be long solved, probably by next year. While unlikely, if we were to eliminate the possibility of a robotaxi network from our model, our price target would be just $350. Note that in cases where robotaxis do not launch, Tesla could launch a human-driven ride-hail service for both strategic and tactical reasons, as we have analysed previously. From a modelling perspective, we previously estimated that Tesla's take rate would be 40 to 60% on average, higher than Uber's 20 to 30% take rate. This year, we fine-tuned our analysis to include the assumption that, initially, Tesla will own and operate its vehicle network, retaining all revenue per mile for the first 1 to 3 years. For later years, we assume that third-party companies will own and maintain the vehicle fleet, earning 20 cents per mile for their services, while the remainder of revenue per mile accrues to Tesla. In effect, Tesla's take rate is 80% on average in the final year of the model. Meanwhile, we revised our median case expectation for the start of a robotaxi service to late 2025. While we pushed back our median launch date for Tesla's robotaxi service by 1 year, we remain confident that the service will launch within the next 5 years. With the release of full self-driving FSD version 12, Tesla transitioned to a neural network that learns from video data and directly controls the vehicle, eliminating over 300,000 lines of manual code. This update has enabled human-like and in some instances zero-intervention driving. By leveraging Tesla's significant data advantage, which now exceeds 1.3 billion cumulative FSD miles according to our research, Tesla is accumulating data at 110 times the rate of Waymo as shown below. Now this is a bit embarrassing, isn't it? Can you see Cruise down here? Oh no, they've got nothing! Tesla has everything. This is a massive important point. When Tesla's version 12 was first released and Elon was out testing it, he explained that they are now using a system where you get video in, controls out. Tesla is gathering the data and AI is sifting through that data to allow the cars to drive themselves based on vision only. It's the most incredible advanced solution to driving and has eliminated all the lines of code. You don't need to program the car and tell it what to do. It understands what to do because it's seen videos of billions of miles of data in many different scenarios. It can just be fed a ton of video from a roundabout and know exactly what to do on a roundabout because it's seen that video training data. It really is extraordinary. Furthermore, our research suggests that Tesla in FSD mode is 5 times safer than a human-driven Tesla, as shown below, and 16 times safer than that of an average car on the road, also shown below. No longer constrained by AI training compute, Tesla's accelerated software updates are enhancing performance and safety. As a result, Tesla should be able to demonstrate superior, statistically significant safety metrics and receive regulatory approval for its robotaxi network. This is miles per crash on surface streets only. There is 1 accident in every 3.2 million miles driven using Tesla's FSD. However, if we look at Cruise, there's an accident in every 1 in 43,000 miles driven. That's quite night and day, isn't it? And this is only going to continue to improve in the future. Tesla plans to unveil its dedicated robotaxi vehicle in August 2024. While Tesla could transform its current fleet into robotaxis, we believe a custom-built cybercab reflects increased confidence that its autonomy software will allow Tesla to scale the robotaxi business. Meanwhile, FSD's 30-day free trial in North America has increased Tesla's data library, as would the rollout of FSD in China, which Tesla is rumoured to launch soon. Lastly, the inclusion of ride-hail app renderings in its latest earnings report teases the release of that business model, which could launch first with human drivers and pave the way to their robot counterparts. Our confidence in Tesla's ability to launch a robotaxi network within the next 5 years has increased considerably, and here's my favourite line in the whole document. As a result, its business model should transform from one-off vehicle sales to a reoccurring revenue base as every car becomes an AI-powered cash flow generation machine. Right, now 2029 model considerations that are not key drivers of our price estimates, so things that are not included in that valuation. Optimus. We assume that Optimus will have minimal impact on our price target. Over the next decade, we expect Tesla to become a leading manufacturer and service provider of robots that move through physical space, as it will have the opportunity to leverage learnings from robotaxis as well as its in-house inference chips, training compute, and manufacturing scale. Tesla expects Optimus to be completing useful factory tasks by the end of year, but we've since found out that it's actually already got a couple of humanoid robots doing useful tasks in factories today. Assuming that it were able to subsume 10 to 20% of Tesla's labour hours worked with productivity equal to or twice that of its human counterpart, Optimus could save Tesla $3 to $4 billion or 1 to 2% in manufacturing costs in 2029. Our research suggests that generalized humanoid robots represent a $24 trillion global revenue opportunity at scale, 50% in manufacturing. Should it decide to sell Optimus externally, Tesla could capture a significant share of this multi-trillion-dollar market, though the meaningful commercialization ramp is likely to happen beyond the 5 years captured in this model. We estimate that Tesla's stationary energy storage growth will outpace its vehicle growth, accommodating 850 gigawatt hours of energy in 2029. If batteries are the limiting factor, however, Tesla is likely to prioritize robotaxis to generate a higher return on investment, as shown below. 2029 average earnings before income tax per kilowatt hour deployed, expected value case. Okay, business opportunities not included in the model. I'm not going to read through all this because it's going to take too long, but the Tesla Semi not included, despite they're about to start mass production of it. The supercharger network, which is a massive deal. Other car companies are now using it. FSD licensing, the fact that Tesla could license this autonomous software to other car users. It will happen. They will have to implement it in their vehicles at some point. Who won't want an autonomous car, or at least a semi-autonomous car at some point? AI as a service, which is a subject in itself that I won't go into now. Ark ends its report with this, the risks and limits to our Monte Carlo model. Ark's 45 independent variables cover scenarios that we believe are plausible outcomes for Tesla over the next 5 years. An unexpected event such as Elon Musk's sudden departure from the company or a natural disaster or pandemic could throw these outcomes off considerably. And that's it. There are a lot of variables that just can't be accounted for, I suppose. Who could have seen a global pandemic coming? A war in Ukraine and Russia, interest rates through the roof, a cost of living crisis. There's so much that we don't know is coming. It's very difficult to second guess these things, isn't it? This to me, though, still seems to be a pretty interesting way of valuing Tesla's future. And to me, Ark Invest seem to have hit the nail on the head. They can see what's around the corner. Whether people believe autonomy and humanoid robots are just around the corner is irrelevant. What matters are the facts. Autonomy is here. If you've seen and understand Tesla's solution to scaling and improving this, you probably know that already. And if you understand that same AI integrated software will also be inside Optimus, it shouldn't take a genius to figure out what's coming. Think through what Ark Invest have shown us. Look at the evidence and the impossible achievements from Elon Musk. What an incredible time to be alive and witness Tesla's coming of age. There was a lot of information shared at Tesla's recent 2024 shareholders meeting, so click this video next if you want to watch that. But otherwise, I hope you've enjoyed this video and it's been sort of vaguely useful. Let me know in the comments below what I've missed. I'm Will, this is the Tesla Jigsaw, and thank you very much Patreons as well, almost forgot you. Thanks guys, see you on the next one. Bye for now.